Hey guys, welcome back to another video, and today I'm going to be showing you how you can make a lot of money as a trader. Of course, it's not going to come easy and there are a lot of things that you need to do, so make sure to watch until the end of this video where I explain all the steps to becoming a successful trader. And speaking of a successful trader, I thought about how I should make this video, and the first person that came to my mind was Carl, because he himself is a very successful trader. He has more experience in the markets than I have. I joined when I was 12 years old, but you know, he was in it for way longer. So I thought that getting his ideas and what, made him super successful in trading would be very important. I'm going to get into all the intricacies in just a second, but Carl has very limited time. So Carl, what do you think is the best pattern or strategy to making a lot of money in trading? Or what was the thing that, in your experience was the best and, best strategy?
I think the most important thing to learn trading is, first of all, to start. You have to start learning. Some people think they can just log into a trading interface and trading view and start picking out trades. It doesn't work like that. You have to have practice and learn, and that comes from starting somewhere. Just maybe start watching some YouTube videos. Of course, you can watch CryptoKid, my videos. There's so many videos out there from many very successful traders on YouTube. I'm fortunate enough to actually be one of the kind of OG crypto trading guys on YouTube. Back in 2017-18, I started my channel to talk about trading. Actually, initially it was not about trading. It was more about just Bitcoin and crypto and economics, and then I started getting very heavy into trading as well, as I personally started learning more about trading.
So what was the most successful strategy that you found earlier on and that really helped you perhaps in the bull market to maximize your returns?
Well, the patterns that I really like to trade are bull flags, bear flags. They're very powerful. Bullish divergence, bearish divergence, I love them as well.
Bull flags are really nice. I really like them too. Trading the breakouts can usually be very successful. So you said bull flag paired along, for example, with divergences on the RSI could work out very well. So you said bull flag, bearish divergence, bullish divergence on the RSI, and that's helped you a lot in your trading. Am I right?
Definitely. Awesome. And then it's about, first of all, you have to learn how to trade them, and then you have to learn how to spot them, find them, and then just be consistent and keep trading them. Because if you trade them at the right time, in the right moment, then over time you should be able to make money because you're putting yourself at the right side of the market. People that lose money trading, usually they just randomly go in and out. They just think it's going to go up. But if you think it's going to go up, then that means most people have that emotion. And then, the market always punishes the majority, and the majority always thinks the same, So it really is very important to step out of the emotional side of us, because we're humans, we have emotions, but emotions are extremely dangerous for trading and investing. You have to turn it off and only trade and invest based on technical indicators, numbers, based on strategies that you've decided already. I'm sure on your channel you're showing some strategies. Yeah. You can just follow CryptoKid, absolute genius. So that's what I would do. But don't FOMO, don't panic sell, don't go away from your strategy. If your strategy is to use $50 per trade, don't go to 100.
Stick to that.
Yeah, don't go to 200. Some people, if they lose 2 trades in a row, they think, oh, now is a good time to double up, so I'll make back my money.
Yeah, this is something that Tone Vays taught me. Only double down on winning positions. Never double down on something that's losing, because that's called revenge trading. And revenge trading never works out because, it's just your eyes go black and you just focus on getting that revenge. So, but Carl, thank you so much for joining. I know you have very limited time. Just to end off, do you have any exchanges that you like to trade on personally and that you've found over the years is reliable and very easy to use?
Well, I will say that my absolute longest standing partner in the crypto space is Bybit. I've been working with them since, I guess, in almost 5 years now. I made them a lot of money, let's say that. I've made a lot of money on their platform, and my audience has made a lot of money as well. So it's like a win-win-win, where I found a partner that I really like, that I like to trade on. Back when I started with Bybit, I was first with BitMEX, and BitMEX was such a bad exchange. Really, it was not good back then. And I didn't get the customer support I wanted. Traders were complaining, affiliates were complaining, so I just needed to find a good solution for my audience.
Changed the game, right?
Yeah. Because everyone in my comments were like, Carl, why are we on BitMEX? Nothing is order submission overload. It's such a legend in the space, And then I found Bybit. I talked to the team and I said, look, I'm happy to be early adopter, investor in your product, and really work together, and boom, since that day, big things happened. When I started with Bybit, they had 20 employees. Today, they have, I think, at least 1.5K, even 2,000, 2.5, I think, at the top of the bull market.
And you know, we were just in Singapore together, and Bybit was super kind to invite us. And honestly, the team is super nice. The products are amazing. It's very nice to trade on. So if you guys do want to be trading cryptos or Bitcoin, you can also head over to the link in the description below to join Bybit, where you can get very nice deposit bonuses. So make sure to check out the link in the description below. But Carl, thank you so much for joining me. Oh, my hand is gone. But yeah, thank you so much for joining. Now we're going to dive into a little bit more details into trading and how you can actually make a lot of money. Just dive in deeper to some of the stuff that Carl said. So Carl, see you later. And guys, let's continue on in the video. All right, so those were a couple of nice things from Carl regarding trading indicators and oscillators as well as patterns. You know, I started trading crypto and technical analysis when I was just 12 years old, and now I'm 16. I've been doing this for 4 years, and honestly, it feels like lifetimes. But jumping into what you need to become a successful trader. So there's two things, well, actually three things that you'll need to learn. Number one, technical analysis. Number two, fundamental analysis. And number three, risk management. Now, each of these are equally as important, although I believe risk management is just a little bit more important than the two. And using these skills, you'll be able to trade not just the crypto markets, but if you want to trade the traditional markets too, or commodities, you can also feel free to do so. Now, I'm going to teach you three patterns in this video in terms of technical analysis and based off these three patterns, you can just immediately start off trading anyways. So that's going to be super cool. And in fundamental analysis, I'm going to be sharing you tips and tricks on how to perform fundamental analysis by itself. And that's basically studying news, economic events, etc. And the final thing is risk management. I'll give you some tips from my background and experience about risk management too. So by the end of this video, you should be a full beginner that is ready to, start experimenting and learning the markets. But guys, make sure to leave a like and subscribe and turn on the notification bell right now because it would be very much appreciated. And you won't miss my daily technical analysis videos where I show potential entries for Bitcoin and other cryptocurrencies, as well as fundamental analysis, which is the breaking crypto updates that I do that you don't want to miss. So make sure to go ahead and do that right now. I'll give you 3 seconds. 3, 2, 1. Okay, perfect. So let's start off with the technical analysis. So I talked about three chart patterns. Now, these three chart patterns are going to be a bull flag, right? Which you can also apply as a bear flag, double bottom, double top, right? And the final one, we're going to be talking about an ascending triangle. So it's very easy. Now I'm going to pull up a chart right in front of you, and this will be the Bybit chart. And if you do sign up to Bybit and do all of your TA on Bybit's chart, it'll actually give you a clear indication on price because once you go on TradingView and go into a different chart, sometimes there are price discrepancies and your take profits and stop losses and entry points sometimes don't match. So I recommend that you perform all of your TA on Bybit's Bitcoin USDT chart. So following that, right, let's spot a bull flag that happened on Bitcoin's history. I really like the 4-hourly time frame for, both scalp trading, right? Not too much scalp, but day trading actually. Day trading and the entry point to find the entry point to my swing trades because I'm a swing trader, but I'll talk about that in later video. So we found the 4-hourly bull flag right here on Bybit's chart, and we can see that exactly once we broke the resistance line at the top, Bitcoin did see a major skyrocket towards the upside. Now, usually on textbook technical analysis, to measure the price target of a bull flag, what you would do is you would take the pole of the bull flag and put it above the final breakout zone. This will give you the target. However, because these are usually very ambitious targets, I like to take profit at the next level of resistance that I find is suitable and appropriate. I find the next level a very key level of resistance. I sometimes use Fibonacci, and with Fibonacci, I see if there is a good spot at the golden pocket, which is at 0.65, and I like to take profit at that point and not let it ride all the way until the top of the pole. So this is basically how you trade the bull flag. I like to put my stop loss at the support of the bull flag itself. So that's what I like to do. Now, the bear flag is the exact same situation. Again, we'll pull up an example of a bear flag right in front of you. It's the same deal, just the complete inverse of it. You just need to open a short position once you break the support of the flag, and then the take profit would usually be at the end of the pull. However, again, I like to find my key level of support or Fibonacci retracement, and I like to take profit at a less ambitious level. So that is the bull and bear flag for you, ladies and gentlemen. Let's move on to the double bottom and the double top. Okay, so the double bottom is a very bullish reversal pattern, right? And of course, in technical analysis, the further away you zoom out in the time intervals to the daily, 4-day, 1 week, 1 month, the more accurate your technical analysis actually becomes, and there's always a higher probability of that pattern following through on higher time intervals. So for this example, again, on Bybit, the Bitcoin chart, let's go to the daily this time to find a very nice double bottom example. So over here, you saw a very nice double bottom forming on the Bitcoin chart, and the way to trade a double bottom is once the price breaks above the neckline of the double bottom, that's usually where you would enter your position. And to find your take profit, you would measure the height of the double bottom, so one of the the triangles, if you want to call it itself, find the height of that and then put it above the neckline. That's how you find your next take profit zone. Now, I don't think these are usually very ambitious, so I kind of stick to the rule for the take profit and double bottoms. So in terms of stop loss, this you can manage yourself. Of course, once we zoom out onto higher time frames, your stop loss has to be very important. This goes into risk management. It's about risk to reward. I will talk more about this later on in the video, so stick around if you want to hear more about stop losses. For a double top, it's the exact same, but just the opposite of a double bottom. It's instead of a W pattern, it's actually an M pattern, and you see a lot of them actually on Bitcoin. So on the daily chart, we can see another example right here, and this time it's a double top pattern. Now, to open a short position, all you got to do is wait for the break of the neckline, and you put your take profit towards the downside, and it's the same. It's the height of one of the triangles itself, and then you measure it, and boom, you would put your take profit over there. Stop loss, again, I will talk about this later on. Now, the final technical pattern that I want to talk about is actually, let's talk about the ascending triangle. Now, ascending triangles are usually bearish, but there are many times that it actually breaks towards the upside too, and you can accompany the ascending triangle with multiple other oscillators. Now, the one I like to use is the MACD. Now, if you use the MACD and the ascending triangle at the same time, you'll have a clearer idea on where the market is going to go towards. So in this example, we're on the 4-hourly time frame for Bitcoin, and we formed a very nice ascending triangle. Now, the MACD, over here, it reflected a bearish, Bitcoin just looked bearish at this time. We could see that from the volatility, not the volatility, the histogram on the MACD. Therefore, it looked like a good time to be shorting once we broke below the support of this ascending triangle. Now, the way to find the take profit is you measure the height of the triangle itself and you put it below the final breakout zone. And that's where you put your take profit. For the stop loss, I usually like to put it just above the resistance so that if price is to wick up and then drop, you do not miss out on that opportunity. So guys, that was a quick technical analysis rundown for if you are a beginner. You can learn more about these on textbook, but it just comes with practice, guys, and with demo trading, which Bybit offers as a platform. So if you want to actually sign up to Bybit and create a demo trading account, I will leave a separate link for that in the description below, because with demo trading, you can actually perfect your trading skills and become a better trader overall. And once you have reached a level of profitability, then you can actually start risking your own money and creating actual real life trades. That's how I started when I was 12 years old. And I did this for like 6 months until I saw that, okay, I'm very confident, I'm profitable, so now I will switch into real life trading. Now we're gonna switch into fundamental analysis, and I'm just gonna give you quick bullet points on what you can use for fundamental analysis, especially in the crypto markets. Now, a website I really like to use, and it's not sponsored, I just really like to use it, it's called forexfactory.com. Now, over here, you can actually see all of the economic events that are happening all across the world. Now, there are two things right? Actually, three things that are very important, three very important events that I live stream usually on my channel because it impacts the Bitcoin price a lot. Number one is the FOMC. Now, the FOMC determines the interest rates, and interest rates, when they go up, they're usually bearish for the markets. When they fall down, they're bullish for the markets. Why? When interest rates go up, it costs more to actually borrow money. And if borrowing money costs more, then people are less likely to purchase, they're less likely to purchase bigger assets such as houses or go into mergers, etc. That's why usually the markets tend to fall towards the downside, and the vice versa happens when the interest rates begin to fall down. Now, the second important one is the CPI, and this is usually paired with the core CPI too. The CPI determines the inflation data. The core CPI is the inflation data without the high volatile stuff like food, I believe is one. So that is the less volatile one, which the Fed usually assesses the core CPI data to determine the FOMC rate. These events as a collective, they do shift the markets. And of course, if inflation falls towards the downside, it would indicate that interest rates would also fall towards the downside. So markets usually tend to see a price movement towards the upside, and of course, the vice versa too. So if you're a beginner, this fundamental analysis is actually a very good one to use. And other than that, you can be following sites such as Cointelegraph, Watcher Guru, or Breaking Whale. These are pretty good ones on Twitter, for example, to keep a track of what's actually going on the markets, not just price. So that could also influence your trade decisions. Now, the final one is risk management. And this one you really should go into deeper, and it's not something that I can explain to you in a very, very short video. This you really need to sit down, study. There are a couple of good books out there, which I will also link in the description below, that you could go off and actually study. But the rule is, right, I'll give you a couple of rules that really changed my life in trading. Never to double down on a losing position, because if you double down on a losing position, right, you're just making things worse, right? It's just the psychology saying, okay, if I double down, I'm going to lower my entry average, so I haven't lost as much. But this is very wrong. You should, in my opinion, well, what I've done is double down only on a winning position and never let a winning trade lose money, meaning at some point, maybe it could be a good idea to put your trade at break even so you don't end up losing money. That's a good one. And other than that, I never like to put 10% of my trading portfolio into one single trade or one single asset. So let's say if I have $1,000, I would never put over $100 into a trade on Bitcoin. I would put the other into Ethereum. I don't use this all the time anymore. I kind of use a different risk management setup, but if you're a beginner, this is kind of a good one to use, never to risk more than 10% on a single trade or asset. Right? That's a cool one to be using. But there are a bunch more things that really I can go into much more detail about. Perhaps let me know in the comment section below if you want a more detailed video just talking about risk management, and I will for sure do one for you guys. Now, about the stop losses I mentioned in the previous pattern ones, stop losses really depend on your risk tolerance, right? My risk to reward ratio is always 2 to 1. I never like to go below that. So if you're not winning twice as much as you're losing, it should never be below 2 to 1, because if it's below 2 to 1, then it's not really worth entering. This is my risk management opinion. This is what I've studied, and I've never gone below that, and I did pretty fine. So that's something to keep in mind when you're opening your trades. Of course, over on TradingView or the Bybit chart, there is an option to see long and short positions and how many percentages that would be. There's a tool for that. So do check that out before you open your trades and make sure that you have a 2 to 1 risk to reward. Ladies and gents, just keep in mind, nothing in this video is financial advice. I just spoke based on my experiences, my knowledge. Of course, you should take this knowledge, study further into it, practice, and then come to your own conclusions. That's what I always recommend doing. But ladies and gents, that is pretty much it for today's video. Again, if you want to sign up to Bybit, you can go to the description below and sign up. An alternative exchange with no KYC is also Bitflex. If you want to be trading on Bitflex, you can also go down to the link in the description below to sign up. That's also an amazing exchange. It's just like Bybit, a little bit easier. The UI is a bit more simpler, and of course, no KYC if you don't want to do that. Ladies and gents, thanks so much for watching. I'm CryptoKid. I hope you enjoyed this video, and yeah, I'll see you guys in another video very soon. Take care, everyone, and I'll see you guys.